So overall consumption has been doing well, but that has been one of the pain point, the rural economy. It's not only about 2 bad monsoons, but 4 bad crops. Also, I think global prices of the agri commodities like soya, cotton, they've also impacted the farmers. The government spending has been less. MSP hikes have been very low last few years, and I think a higher spending in the rural area will go a long way in reviving the rural consumption. So overall consumption we have been positive, discretionary side consumption, and I think the urban consumption is already showing signs of revival with the now rural economy rural economy reviving is going to be good for the overall consumption perspective. But overall, I think the budget has been quite positive. Apart from the budget, you also have to see lots of other actions which is happening. So we have almost forgot about the legislative reforms, but look at the bills that are getting passed. So Aadhaar bill, the constitutional validity to Aadhaar for all the direct benefit transfer, the real estate regulation bill, your mineral and mining bill. I think several other the policy measures on the oil exploration side. I think there are lots of other actions which are happening in terms of the Uday. We saw the first bond issuance by the UP.
You're only giving me good news. There has to be some bad news. Good news and bad news, they coexist in a market. That is what makes financial
There have been lots of bad news. That's why the Nifty is not at 9100 where it was there a year back. I mean, one of the biggest is that we haven't really seen the broad-based recovery in earnings, which we completely agree with the other two gentlemen that I think from the base that will get created, there is a huge possibility of a swing in financials and commodities and most of the other stocks where the earnings, which have dragged down the overall Sensex or Nifty earnings. I think next year there could be, from a very low base, there's a potential of a positive surprise.
Sunil, for the longest time you've argued that you like consumer as a theme, but you don't like consumer stocks because they are wildly expensive. And right now it's evident that consumer stocks are underperforming benchmark indices. The stocks are broken down. There is no leadership. What is your view on consumption stocks now? We've seen a time and a price-wise correction which has kicked in the ITCs and the HULs of the world.
See, we continue to have the view that consumer staples are fairly penetrated in India.
Okay.
And the valuations at 40-50 P with a growth of 5%, 10% in volume terms. See, value terms can't just keep on happening. You have to look at the volume terms also. So we continue to have a fairly non-positive view on those. But there are a lot of consumption themes which are nascent. We have talked about alcohol as a theme. We have talked about urban discretionary themes like entertainment, QSR. I think those are themes where the penetration is quite low, and where the sector's penetration is low. We believe that there can be multi-year opportunities, the way we had in the consumer staple companies.
So it looks like you're betting on all the vices of a man: alcohol, junk food.
No, you can. I think these are the necessities of life now. I don't know whether there are vices or not. But even branded apparels, for example, I think we are very positive. In fact, anything which is branded, because we are reaching a stage where our standard of living is rising to a level where we want better quality. And there is an acceptance of brands because, it gives you a sense of prestige, it gives you confidence. And also because people realize that, a good brand is good quality. So I think these are good themes, and maybe, from here on, there can be a 10-20 times size growth in some of these themes, which might not be possible in a soaps and detergent company or some of the other, consumer staple companies.
Fair point. Bharat, if I look at the benchmark indices, this year Tata Steel has emerged as one of the biggest outperformers. Metal stocks in general, both locally and globally, they've made a sizable comeback. Are you tempted there?
See, we do have a few metal stocks in our model portfolio, but to be honest, I think a large part of the reason why we have them at this stage is because we anticipate a trading rally, and that's been playing out at this point in time. I think some of them do have core fundamental strengths, and we'll stick with them. But as for the rest, we'll have to examine the appeal as we go along, because let's face it, as we discussed earlier, global growth remains a big problem.
Navneet, we've discussed the mood points, budget, global technicals. Now let's discuss the data points. Ultimately, facts. Facts really matter. Next credit policy, if RBI does not oblige with a 25 bips rate cut, will that disturb the market?
Why it would not? Let me think.
As a fund manager, I'm sure you're prepared for both those scenarios.
There's a fair amount of possibility that RBI actually cuts interest rate. Even if they don't cut, I think even if they release liquidity in a significant manner, and then the transmission happens, I think that itself will be good for the market, because what has happened over the last couple of months, the short-term yields have moved up quite a bit, and I think as the government spending starts from April onwards, both the central and the state governments, I think short-term yields can actually fall quite a bit. I'm quite optimistic on some policy action in the April policy, if not before, 25 to 50 basis point rate cut, and I think that will again boost the sentiment.
If we get a 25 bips rate cut, is that in the price? Markets,
I think as far as bond yields are concerned, maybe to some extent it's already in the price. I think even from the equity market perspective, I think a 25 basis point rate cut is something that won't really excite the market.
So you don't expect a sell on news event if we get 25 bips rate cut in the April policy?
I don't think market has moved up anticipating that there is going to be a rate cut and then will move higher, not necessarily. I think the overall monetary policy framework plus the fiscal consolidation, we are putting a right kind of building blocks for a sustainable, good macroeconomic environment where we can get a good sustained growth with less inflation on a very long-term basis, and I think that augurs well for both the asset classes, equity as well as bonds.
Sunil, earnings are not there now. That's the crude reality.
Earnings are not growing. Earnings are there.
Oh, they're not growing. I can argue that there are earnings are not there in some companies. But my specific point here is, are markets prepared to see another quarter of bad earnings? If Q4 numbers are bad, will that shock the market? Will that disturb the market?
So I think Q4 anyway, not too much is expected, frankly, because obviously financials will have one more round of the AQR related write-offs, and encouraged by one or two banks who have taken the courage and written off everything in December and seen their stock price react positively. Many more banks will be encouraged to do that front ending. So we don't expect that to happen. The good thing is that the street expectations are also quite low. And at least in my 15-20 years, I've seen that it's not the absolute number which matters. It's expectations and reality which matter. So if your expectations are for a 20% growth, even 19% number is negative. And if your expectations is 5%, even a 6% growth is negative. And we have seen that in so many sectors where price moves like the stock price moves up by 5-10% just because the stock has outperformed or underperformed by 0.5 or 1%. So we don't expect too much from the March quarter, but still there will be positive, overall consolidated numbers because of sectors like oil and gas, metals in particular, even some autos.
You guys rarely come on such a forum, and when you come, our readers and our viewers, they expect some big ideas. So when Sunil Singhania opens his mouth on a public forum, he's expected to make a big prediction. What is your big prediction? What is your big idea?
So, I was very clear even at 7,000 that this year, 2016, is going to be either a minus 10% year or a plus 30-40% year.
So minus 10 has already happened.
No, from 7,000. So basically, this is not going to be a year where it is going to be flattish.
Okay.
It has to be a trending year either side. So we disappoint big time. The global environment is very bad, and we react by 10% because we've already reacted so much. And if things work out, even 50% the way we are envisaging, then it's a 35%, 40% year.
So according to you, a new high is coming?
If things work out the way we are expecting, and I think the chances are now more than reasonable.
New high, how soon?
I wish I could be as courageous as Sunil. Our base case is, you make about 15% in Indian equities this year.
That you said last year also.
Yeah, but I guess, no, I didn't say that last year. Last year, our view was that it would be a year of consolidation. But this year, from the beginning of the year, we maintained that, it could be a year where you make about 14-15%. We very much hold to that stance at this point in time. For more than that, for a new high, Nikunj, I guess, you'll need a lot of stars aligning, and they will not be domestic stars. They'll have to be international stars. So, much more difficult to predict. So, for now, I think we'll stick with 14-15%, and if we get more, we'll take it.
Star, moons, whatever has to align will align. When do you think markets will make a new high?
So I'm not sure about the index level, but I think from these levels, getting 15-20% returns in several stocks across several industries should not be a challenge.
Give me a flavor of a favorite theme or a favorite sector.
I think the universe for us has expanded. In fact, post-budget, because the rural consumption is likely to revive, a lot of investments in agriculture, even from a global perspective, I think that at some point in time, the policymakers will realize monetary policy cannot be the only game in town, and some amount of fiscal policy will start showing some action. That will probably revive, even at a global level, some kind of industrial capex. The global consumers are doing well. On the domestic side, I think whether it's financials, consumer, industrials, across the board, as long as you are buying a quality stock and then keeping a tab on the quality of the balance sheet management, business, and I'm more worried about the disruptions that are coming from the technology, the ease of doing business, the change in way of doing business. If you think that it's not significantly impacting the business model, then I'm quite optimistic. I think there are several stocks one can play.
You've given me a long list. I love that list. Let's narrow it down.
I think it's a lot more, the whole idea is that I think it's a lot more stock specific than a top down sectoral idea.
Sunil is a friend, you don't consider him competition, you can tell me what you want to tell me.
So as I said, so some of because the overall rural economy has been in distress, I think several stocks could not do well. I think that opens up lots of opportunity for lots of companies. As the overall 50-60 crore consumers, I think if their incomes improve, I think there are going to be lots of opportunities.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.